While everyone is panicking, this is where money is made. I'm loading up on Hims stock while others are selling. I'm also going to be breaking down the biggest moves that happened last week and what you can expect the next week in the stock market. And then I'm also going to be giving you an update on my $100,000 challenge, week 44. Let's get into it. All right, so here we go with the weekly stock update, why I'm going to be buying more Hims. If you can, please give a like and subscribe. It really helps the algorithm. I really appreciate it. So I am buying more Hims stock. As you can see, Hims stock is down 69% in 169 days, and it's gone nowhere in about 661 days. But if we look at it, since they announced the deal with Novo, everyone was thinking their short squeeze was going to be insane, and it did go up 70%. But it's actually down 29% in the last 21 days. So people are wondering, like, why isn't it up more, right? The short interest didn't go down as much as people thought, so the squeeze did not go as big as people were hoping it would. We're still at around 40% of the shares shorted, around 81 million. This is according to Robinhood of April 1st. So still a lot of shares shorted. Some Hims news, they're building a consumer-first digital healthcare platform that integrates diagnosis, treatment, and fulfillment into a seamless technology-enabled experience. Hims aims to shift routine care away from traditional settings, this is big, toward a more accessible, individualized, and digital-first format, addressing a wide range of chronic conditions while improving convenience and affordability. This is huge, and I'm going to go over exactly how they're going to do it, and I'm going to be a subscriber. The launch of the initiatives such as labs reflects a broader push towards proactive, data-driven healthcare where biomarker insights and doctor-developed action plans doctor-developed action plans guide more tailored interventions. Together, and they've also done, they have the specialties with hormone and menopause and testosterone, right? Collaborations with the GLP-1s, and then they bought Zava for the international stuff, right? Together, these initiatives position Hims as a technology-led healthcare platform focused on delivering personalized, data-driven care at scale. This labs is big because I'm actually going to be, like I said, I'm going to be a customer. I ordered it. It's $350. I'm going to go in and get my blood tested. I'm just going to go into a Quest Diagnostics, get my blood tested, and then I'm going to, show some of the process of how it works. So once I get into that, I will show you how it goes. Some other news, the FDA, they came out and they said basically once a product is no longer in shortage, which once a certain product like semaglutide, when that was in shortage, you could just make all kinds of, semaglutide products without, worrying about any IP, right? So once a product is no longer in storage, pharmacies and outsourcing facilities must stop making versions that are essentially copies of commercially available treatments. That's it. Okay, well, they partnered up with Novo, so what does it matter, right? Hims did have a hacking event on February 5th. They became aware of suspicious activity affecting their third-party customer service platform. On March 3rd, they identified personal information related to a limited set of individual preset and affected service tickets, offering complimentary credit monitoring and identification services, of course. And then they said that the customer medical records were not impacted by this incident. Neither were communications or the healthcare providers on platform. So basically, no big information got leaked. So top 3 rewards of buying Hims would be massive diversification and international scale. Like we just said, they have all different kinds of stuff from menopause and testosterone, and then they're going international with Zava, I don't know how to say it. And they say they should have a revenue run rate of $3.25 billion by 2027. And then again, non-GLP-1 growth with the mental health, sexual health, dermatology, all of that. They still have their sights set on the $6.5 billion revenue by 2030. And then the strategic strategic pivot to GLP-1s branded, which is with Novo. So those are the 3 top rewards for getting Hims. The top 3 risks, I think, are actually non-existent almost. The regulatory legal threat, FDA, SEC, Department of, I don't think they're going to do anything about the compounding drugs. They just announced that, it's the essential copies. They're not going to do that. Then the near-term compounding cliff, it says, this again was the Google AI search. It said shifted away from compounding oral semi-gluten. They never did that. So that's fine. Extreme stock volatility and short interest. This is for sure something that it's always volatile, but it has now less than 40% of the float. And I think if they just continue to have good news and no more battles with Novo, then it will go up. If they for some reason have that deal go bad and it somehow goes out, then HIMS would get hit pretty hard for sure, the stock and the revenue. But so far the revenue has grown 59% year over year to 2.35 billion according to the last quarter, which was the full 2025. The net income only went up 2% because they've been doing a lot of investments. The adjusted EBITDA went up 80%, operating cash flow up 20%, free cash flow down 71% from those investments. Subscribers are up 13%. Now I'm gonna do some numbers really quick for you too. We have 2.5 million subscribers. It went up 13%. The monthly revenue per subscriber on average is $83. It went up 28%. So now if we do the math and we did $90 times the 2.5 million, right? Let's say they didn't even grow the subscribers and then they just grew the amount that they're charging those subscribers barely, right? About 10%, less than 10% growth. You're talking, and you do that times 12, right? That's per month times a year. Talking 2.7 billion, that was their low target of the year. 2026 was 2.7 billion to 2.9 billion. I think they're gonna definitely hit 2.7, if not 2.9, possibly even 3, depending on how many subscribers they get and how much they can raise the revenue per month. Then they did the deal with Novo, so that's going to help the business, of course. Since last week, thousands of people, and this was March 26th, and then they did start sending it out already. So we had the stock market update, right? Just really quick, I am buying HIMS. Those are all the reasons why I am going to be buying HIMS. I do not recommend anybody do anything that I do or say. I don't give advice, but I'm buying HIMS for all of those reasons, and I say take a look at it. Stock market update. So this is the S&P 500 over the last week. Pretty green actually, right? Pretty green. Now NASDAQ is not in correction territory. It's now only negative 8.5% in the last 64 days. Then we also have the S&P 500 down 6% in 64 days. And the Dow Jones down 7% in 50 days. So they're all now out of that correction territory. AAII Sentiment, as you can see, there was a lot of neutral here. 3% went away. 1.5 here, 1.5 here. So really it was split. It was a split. No one knows exactly what to do. This week's special question, though, is how are oil prices affecting your perception of the economy? And then a lot of people, it's like 34% or plus, more than that. And then they say that it will have a significant negative impact. Then it says it depends on how long oil prices remain at current levels, 24, and then they will slow economic growth somewhat, 23. So you're talking almost 50% here, plus another, at least 80% think that this will hurt the economy in some way, especially if the oil prices remain at this level, and it could. Right now, the fear and greed index, we're in extreme fear. Previous close, we were in extreme fear. 1 week ago, we're in extreme fear. A month ago, we're in fear. 1 year ago, extreme fear. So as you can tell, the stock market has not been happy. It's not been very greedy. There were times, of course, we were greedy and in extreme greed. But the last year, there has been a lot of extreme fear as well. So in the last week that happened, we had the major indexes. They snapped a 5-week losing streak. They all snapped their longest losing streak since 2022. The big catalyst was an unconfirmed report that Iranian president might be open to ending the ongoing conflict with specific security guarantees. This, I want you to keep your eye on this right there. Unconfirmed. That is huge. That is big. 2, energy shock. The U.S. crude eclipses 100. Tensions in the Middle East continue to dominate market movements, pushing energy prices to multi-year highs. The U.S. crude oil closed above 100 for the first time since 2022, while Brent crude soared as high as 118. War uncertainty. I want you to also pay attention to that. I got the star there. President Trump suggested that the conflict could continue for several more weeks, dampening earlier hopes for a quick ceasefire. Then the economic impact was the energy surge fueled concerns about grocery shock, and then the persistent inflation leading major retailers like Amazon to implement a new fuel and logistics surcharges for sellers. So now that's all happening. More charges for sellers, and it's just not going well with this whole Iran thing, right? Tech sector, volatility, and strategic deals. NVIDIA and Marvel $2 billion strategic investment partnership announcement. The memory stock route, Micron faced heavy selling pressure because Google announced an AI breakthrough that reduces memory requirements for running models. And then Tesla suffered its deepest drop of 2026 from disappointing deliveries report. Because we have Good Friday and we don't have Friday, the market's not open on Friday, I felt like I would just put some of this on there. We will be having the March jobs report, and the markets are looking for proof that the labor market isn't cracking under the weight of high energy costs. Economists expect a modest rebound of approximately 60,000 jobs. Unemployment rate projected to hold steady at 4.4. AI effect, people think that, it's going to lead to over 15,000 planned layoffs in March alone. And then this is where I wrote right here, lose-lose, because if we miss significantly fewer than 60K, it could trigger recession fears, while a beat may cause the Federal Reserve to further delay interest rate cuts. It almost seems like we can't win no matter what we do unless we meet exactly at that. And I feel like the market's going to find something to go wrong, right? And then we also had the Trump new tariff pivot, marking the 1-year anniversary from his Liberation Day. The proclamation is on April 2nd, 2026, to reshape the tariff landscape. They did 100% patented drug tariff, ordered 100% tariff on imported drugs for companies that do not agree to lower retail prices or move production to the U.S. And then metals overhaul. The administration adjusted its strategy on steel, aluminum, and copper to close loopholes. They did a flat 50% duty and then a 25% derivative rate. The Nonpartisan Tax Foundation estimates these trade policies will act as a $600 tax increase per U.S. household in 2026. So that's just going to add to, the taxes and how much we pay on the average. So Trump had a speech last night, or maybe it was yesterday, last night. And it didn't go well. It says, what the hell did he just say? GOP Iran worries build Trump after Trump's speech. Republicans wanted a clear message on the war from Trump. Instead, some feel they got the runaround. So I'm going to play some stuff that he said and exactly why it just didn't sit well with investors.
If there is no deal, we are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have all the cards, they have none. It's very important that we keep this conflict in perspective. World War I lasted 1 year, 7 months, and 5 days. World War II lasted for 3 years, 8 months, and 25 days. The Korean War lasted for 3 years, 1 month, and 2 days. The Vietnam War lasted for 19 years, 5 months, and 29 days. Iraq went on for 8 years, 8 months, and 28 days. We are in this military operation, so powerful, so brilliant, against one of the most powerful countries for 32 days.
Now, that doesn't sound exactly like someone who's going to get a war done early. He's saying, all these wars are, were so long, and this war is so short. Why are you trying to compare it to those long, drawn-out big wars? It just doesn't sit right with me in terms of how long this thing could actually go. So Trump starts the speech on Iran war right here, and then it goes down a percent initially, and then it actually opened up. It dropped about almost 2%, but then we popped up after unconfirmed resolution talks. So the market is like, we don't know what to do. But then I took the screenshot of later on during the day, and then Israel, U.S. step up strikes, Tehran vows retaliation, United States and Israel have stepped up attacks, Donald Trump threatened to bomb Iran back to the Stone Ages, and then Iran's military cautions that the war will continue until the humiliation and surrender of its enemies, and warns against a possible U.S. ground invasion. I mean, if you haven't heard Trump and some of the stuff he's saying about Iran, he is getting into it. He's just like talking very down about them, and they're not happy about it. They don't want to hear what he has to, like, they don't want to hear that. And so why they have no motivation to end this, really. And so in the context of war, the stock market fears uncertainty more than the conflict itself. Markets struggle when they cannot model risk. Sustained energy shocks. The greatest long-term fear is a prolonged spike in crude oil prices. If a conflict disrupts major oil producers or shipping routes like the Strait of Hormuz, it may drive a runaway inflation and squeeze consumer spending. Recession odds. This could eventually lead to a broader economic recession. So, that being said, this is not good. It's not good. Not just the uncertainty, but just the impact of the war. Next week's news. So for next week, we have the March CPI inflation test. Right? Investors are terrified of reinflation. If the CPI comes in higher than expected, it could force the Federal Reserve to consider further interest hikes, potentially ending the market's recent recovery. So again, we feel like we're in a lose-lose, right? It doesn't matter what happens. It's just something bad. FOMC minutes, right? Searching for the pivot. So traders will comb through these notes to see how many Fed officials are truly worried about the labor market following February's surprise job losses. Any hint that the Fed is leaning toward a rate cut earlier than June could spark a major rally in tech and growth stocks. So I don't know if that's going to happen with oil going up, though. It just doesn't feel like it can. I don't know. But that would be maybe the only thing that could help the market, is if they were to talk about rate cuts, but I just don't see them doing that with oil being up where it is. And then we also have the kickoff to Q1 26 earnings. While the big banks don't report until following next week, we do have Delta Airlines that could give us some fuel surcharges and supply chain shifts. Some information on that in response to the Middle East instability. So really quickly, the earnings, got nothing much, right? Got Delta on Wednesday. Nothing really big. So we're going to kind of hear what they have to do, or what they have to say about all the oil and, the fuel. So this is my $100,000 stock market challenge, week 44. And as you can assume, if you do follow HIMS and some of the other stuff, you can probably assume I haven't done too well right now. 7,300. I am up on the week, at least. I was down a little bit less than 1% on Thursday. So these are all my positions. As you can see, I added to some of these positions. So I got TQQQ, HIMS, Celsius, Meta, and Amazon as my top 5. I do want to start adding more Adobe and CRM. I want to add a lot more of those. Nike had a horrible week, as you can see, down 15%. Their earnings came out. Investors did not like what they had to say. But like I said, HIMS, Celsius, and CRM, I do want to start adding a lot more of those. Adobe as well, but I want to be really adding on HIMS, Celsius, and Salesforce. Those are the 3. And my total right now, my total investment on all those is down. Salesforce, I just started my investment. Celsius and HIMS, I had this at the start of the challenge. And so I have been adding on to this position. And I'm just going to keep adding on, because I think these prices are definitely a buy price. And as you can see, I did buy some Adobe. I bought $50 of Adobe, $50 of Salesforce, about $70 of Celsius, and about almost $60 of HIMS. And I bought 1 share of Oddity. That's a smaller market cap AI makeup company. It got hit hard from their advertising, but I think it's going to grow significantly from these levels. And then these were just some dividends that I got, so you don't have to mind that. This is kind of to end it. It feels like stocks are still on sale right now. I do believe the market will go down a little bit more. I don't think it can continue to drive up, especially if there's no resolution of the war over this 3-day weekend. You can definitely expect Monday to be a little bit crazy, so in my opinion. So I think that stocks will continue to be on sale, and if they are, why aren't we just out there grabbing them like this, right? So I really do appreciate everyone who is still watching. Thank you a lot. Thank you. Please give a like and subscribe. It helps a lot. And yeah, again, if you're just aware and prepared of the whole situation and you understand how things go and you're up to date on stuff, you're not scared. If you're aware and prepared, you're not scared. So anyway, thank you again for watching, and never forget to
earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.